This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver, and I'm thrilled to be joined by Gianni Kovacevic. He's the author of My Electrician Drives a Porsche and also the founder and executive chairman of Copperbank. Welcome, Gianni. It's good to see you.
Thanks for having me.
Now, Gianni, with the copper price seeing some downward pressure of late, the thesis of your book, is it still intact, would you say?
Yeah, the book has been written for a medium to long-term horizon. And it's basically, it answers the question on how we create, transmit, and utilize energy. And then the future of energy in all its forms is going to be electricity. I think everyone at least understands that to some respect. So the recent downward pressure on the copper price, I would suggest to you, has been a function of the strength in the US dollar. So if you look at that graph, they're basically trading at sort of inverse positions.
So they're inversely correlated, typically?
Yeah, we've seen that lately. We had a very strong US dollar, and then I think anything based in US dollars has come off within reason, the same percentage.
So what are you anticipating for the copper price in the next while?
Well, the entire thesis of my current investment in Copperbank is this medium to long-term position. And if you look at where copper comes from, the supply side, we've almost never seen a time where there's been such a lack of inducement to build new projects. And the major miners are telling us, I use a graph that BHP Billiton came out with that says the inducement price for about 70% of the future copper projects is $3.50 a pound.
Okay, that's what gets people excited and wanting to go out and build stuff?
Yeah, it's not the lack of will, there's lots of that, it's the money.
Right.
You can't invest, there's no investors for this stuff. Meanwhile, you have demand growing at a very reliable pace still. It's not just China. We've got India coming up now, which is going to be China 2.0. Okay, much slower pace, but something like that. There's no downside in the per capita consumption of copper now in India, elsewhere in the world. So demand is going to be reliable, in my opinion, if not robust, but supply is a big problem. And if you look at a simple graph that I think most of the major copper mining companies are using now, 2017, 18, 19, it's a big problem. We need to reinvest in copper, both existing and new projects.
Right. Now, we were talking a little bit before about green metals, and you were saying that people underestimate what it's going to take in order to have green energy.
Yeah, they do. When you go to a conference that's to do with the sustainable cities or green energy, they don't ever mention the words like copper or platinum or palladium or the things that make it possible, lithium and graphite. And it's the intensity of those basic building blocks of green energy. So wind and solar, for example, require between 4 and 6 times more copper per megawatt of capacity than that of conventional energy creation. Offshore wind takes 10 times more. So it's a magnitude more copper. And when you look at the energy complex in general, we talk about the transfer of energy. There's only 3 ways to transfer energy. You do it through a pipeline, oil and gas. You do it through a railroad or a ship, that same oil, or maybe it's coal. Or you can transfer energy through an electrical cable, electricity. And then when we go to how we create energy, the future of energy creation and transfer is going to be electricity. That's what green energy is. And of course, utilization.
Right.
In the way we utilize these things, or almost everything comes with a cord stuck at the back of it, and even transportation. Trains can all be electric, and we're going that way. Cars are certainly going to be a meaningful sort of new user of that kind of energy. Less fossil fuels, more electric energy. And the single biggest beneficiary of all of this is going to be copper. It's remarkable, it's irreplaceable, and it's infinitely recyclable, and it's the brains of all these systems.
Now, what about platinum and palladium?
Yeah, platinum and palladium I consider them green metals as well, and it's something that I think is going to be more acutely, the supply and demand imbalance is going to be felt more coming into the future. We've seen typically palladium and platinum, they come from places like Russia and South Africa, of course, and it's very hard to find future new sources of platinum or palladium that are not in those old jurisdictions.
Right.
So.
Yeah, and those areas may not be guaranteeing supply for very long.
Yeah, it's difficult. It's difficult.
Now, what are you doing with your investments these days, and what are you recommending to people?
We traditionally, there's a group of guys that I follow and co-invest with, and we've traditionally invested in copper companies. And there's three types of companies you can invest in. Of course, there's production, there's development, and then there's exploration.
Right.
I'm not investing in any of that right now because there's no reward. On top of that, I can buy exploration at 5 or 10 cents in the dollar. There's a fourth type of company. It's called the hold. It's the buy the entire asset, watch the asset, don't spend any money, don't do anything, but take care of your per share value in the asset that you're buying. And so what we did now, rather than invest in various companies, we created our own company. It's called Copperbank. And it's kind of a self-explanatory term. We own assets 100%. We have no outstanding work obligations, and we're holders. And we manage as owner-operators. We're very large holders of our company. So I like to say we throw pennies around like manhole covers because we consider it to be our cash. And we're going to protect our per share value for the medium and long run on the existing resources and reserves that we have in the ground. So on our peer group table, we're sort of near the bottom of that.
Yeah.
And
what about carrying costs?
Well, depending on the project, so our Nevada-based project is mostly situated on patented land, so we own the land. So in the state of Nevada, you pay per claim, it's $10.50.
Okay.
So it's very inexpensive. We also have BLM claims there as well, but it's not a very expensive project to maintain, and it's a lot of money's been spent there already. It's at the PFS level.
Right.
And then our projects in Alaska are situated also on private land, so it's a land lease partnership with the Alouette Corporation. And it's also had a significant amount of drilling, so that's been de-risked on our Pyramid project. And it's probably it would take around maybe better than 40 million Canadian dollars to duplicate the work that has already taken place on our various projects.
Okay.
So our market cap's around 5 or 6 million.
Right.
And so there's the arbitrage opportunity.
So what's the end kind of vision there for the company?
The end vision right now, we're still acquiring. Markets are beat up, so we want to take this opportunity to explore the ability or the opportunity to buy more projects. But in the medium to long run, as the price rebounds, which I think it has to, simply because of what I told you, the $3.50 to $4 threshold for new projects, we would look to create shareholder value by divesting these projects in a very accretive manner. It paid kind of like a dividend to our shareholders.
Interesting. Great. Well, Gianni, thank you so much for the update, and we'll certainly be watching with interest.
Thank you so much.